I'm Madeline from AirDNA's communications team, and it's a great pleasure today to introduce this webinar with Tom Williams, our learning specialist. He's going to be talking to you today about learning how much money your property could earn. If you have any questions, pop them in the Q&A or the chat, and we'll get to them at the end. And this meeting will be recorded, so you'll get the recording in the next few days. Okay, over to you, Tom.
Perfect. Thanks very much, Maddie. So yeah, as Maddie said, I am a learning specialist here at AirDNA. So what it means is basically I help our customers, really get the best out of our products. So let's dive straight in, and I'm just going to share my screen. Just one moment. Okay, great. So yeah, as Maddie said, we are looking today at how much money a property could generate as a short-term rental. So MarketMinder, with this tool, you can find there's a lot of great ways of finding this out. The easiest or most direct, and in general the most popular, is through our tool Rentalizer. So this is our proprietary Airbnb estimates tool. So with this, you can input any address, or even you can even input, latitude and longitude points in here, and we give you an idea of what that property could generate as a short-term rental over the next 12 months. So I've gone ahead and put an address in here already. As you can see at the top, it's a 2-bed, 2-bathroom property that can accommodate 4 guests. And below that, you can see the revenue, average daily rate, and in turn, also the occupancy rate we're estimating for the next 12 months. So the first thing to take into account with these figures is they're based on the idea that this property would be available to be booked every day of the next 365 days. So how do we come up with these figures? It's by looking at comparable short-term rentals in the area. So properties that are already short-term rentals and how they performed over the last 12 months. And when I say comparable, we're looking at, first of all, how close they are geographically to the address that you've entered. And then secondly, how similar they are in terms of the number of bedrooms, bathrooms, and guests they can accommodate. So if you scroll down on the Rentalizer, you can see those comparable properties that we've identified. So we'll search for up to 50 within a 10-mile radius. So you can see in this case, we've identified 40, and we'll always show you maximum the top 12 comps that we found. So I should say, 10 miles or a 15-kilometer radius. So a good way of looking at it is on the map on the right here. So you can see the blue dot represents the address that you've entered, and then these purple ones represent these comparable properties that we pulled. So the figures are then calculated by looking at these properties' historical performance, as I said, over the last 12 months. So it's always based on, it's a weighted average. So the properties that are most similar to the address that you've entered will have a stronger impact on this overall revenue figure. So you can see this property is being rated number 1. So let's look at this one to begin with. So if you hover over the tile, you can see on the right on the map, it's bouncing up and down. So it shows you how close it is to the address. You can see it's 2-bed, 2-bath, and can accommodate 4 guests. What we always recommend with these comps is actually clicking through to their listing page, wherever they may be listed. So in this case, they're on both Airbnb and VRBO. One thing Rentalizer doesn't take into account is amenities. So, you know the address that you're inputting better than anyone else. If it has a pool or a hot tub or, anything else that might set it apart from other listings. It's always good to really identify, look at these comps and identify whether they have similar amenities. You're comparing apples to apples. One thing to bear in mind, again, is how we're looking at these figures. So I mentioned that we're basing this on the idea it's available full-time over the next 12 months. In order to have a fair comparison, we need to look at these properties through the same lens. So that's what this revenue potential figure represents. So we look at this one, it's quite a good example. So you can see over the last 12 months, this property was available to be booked 363 days of the available 365, occupied 85% of those 363 days, booked at an average of $250 a day, and in turn generating 77.2K in revenue. The revenue potential is then the figure we predict this property would have generated if it did have that full-time availability. So you can see, in this case, only 2 days. So you can see that only a difference of $300 between the two. A better example might be this one. So you can see 182 days available, occupied 73% of the time, generated 35K in revenue. If it had that full-time availability, we predict it would have generated just under $47,000. So that's kind of how we come up with these Rentalizer estimates. The other really useful thing on this page is the financial calculator. So with this, you can input a purchase price for the property. So let's just say this one cost $1 million. You can then input any operating as well as startup costs that you foresee with this property. These are all changeable, based on, how much you anticipate spending or where you're located. It's all very variable. And this will then have a knock-on effect on this net operating income. So this is obviously just the gross that you've got at the top here, minus these operating expenses. And excuse me, it gives you an overall cap rate, which is basically like your return on investment for the first year. So just 4.58% of that initial $1 million is your operating income. In this case, $45.8 thousand. Cool. The other really useful thing on the Rentalizer page is this Rentalizer estimate and seasonal revenue forecast. So with these, the Rentalizer estimate, this is really helpful to get an idea of how overall market performance has affected this property specifically. So what we're saying with this is you can see these are all historical dates. So we're looking, in this case, November 2020-21. We're saying that if you would input the same address at this point in November of 2021, the revenue projection or estimate, would have been $68.1 thousand. So different to what we're seeing now. And over time, you can see how that's changed leading up to this year. So it's really helpful to sort of see how market change affects specific properties. The other thing is the seasonal revenue forecast. So this is useful for a number of reasons. First of all, it's showing you the seasonality in the market, where the high and low points are. So based off this, you could say that this is a summer market in terms of where you're going to see your best revenues. But you can also use it to get an idea of the monthly revenue for this property. Obviously, you've got an annual on the left here. And then you've also got a range. So if we look at July of this year, that's estimated to be the best performing month, with a revenue of $7.8 thousand generated, with a range, a lowest figure of 7.4 and a highest of 8.2. So it gives you, best and worst case scenarios for each month going forward for the next 12 months. So this is quite helpful because you can use this and then compare what's happened historically in the market and whether, we're seeing a similar pattern for this property as we have for similar properties in this market over that time. So if we take this example, so we'll do July. So July of this year, we're estimating a revenue figure of 7.8K. So we go to the revenue section of MarketMinder. So that's historical data. In the research section, you've got the most comprehensive filters in MarketMinder. So, you can change it by the real estate type, the listing type, whether it's professionally managed or not, even down to, the ratings it's achieved on Airbnb. So I've selected a 2-bed, 2-bathroom property in Denver. I've selected it's more of an upscale property, so I've already selected that from the price tier section. And then if we go to the average revenue by bedroom, this will then show us how similar properties have performed over the last 5 years in revenue performance. So we saw July, the projected revenue for this year is 7.8K. You can see of 2022 was 7,000, 2021, 7.3. Obviously 2020, kind of hard one to gauge, so it's a bit different. If you go back to 2019, you can see again, it's kind of changed. But based on 2021 figures and 2022 figures, the 2023 figure is fairly consistent from what we've seen historically. So it kind of fits in with what we've seen, as I said. Excuse me. You can do the same for the rates and the occupancy to kind of see how that's changed over time. Again, the Rentalizer is great because it gives you the next 12 months projected performance, or estimated performance, I should say. Whereas the historical data in the research sections is giving you 5 years worth of data, going back, so you can see, are we projecting similar to what's happened historically? So it can really kind of give you an idea of where this property will sit in this market. As I said, you've got really comprehensive filters on these pages. You can also adjust the time frame you're looking at. So at the moment, we've got it by month. That'll show you the last 5 years. You can also select weekly, and that'll give you the last 3 years worth of data. And you can even go as granular as by day, and that'll give you the last 12 months. So you can kind of see how that's changed over time as well. As I say, you can do the same with the revenue. So if you wanted to see how that changed, especially in those more popular periods of July, which days are most popular. So it's really helpful in that sense. But let's just jump back to the invest section and go to the top properties. So obviously, if you're investing in an area, you wanted to kind of see what those top performers look like. So again, let's select 2 beds. You can do it at the top here. With the top properties page, you can view them by the total revenue they generated over the last 12 months, the average daily rate they're charging, and the number of reviews they've received over that time as well. So let's just leave it at revenue for this time. As before, with the comps that we pulled in the Rentalizer, again, it's a good idea to click through the listing pages, see what it is that really separates them from everyone else, what it is that's seeing them generate such high revenues. What's really useful here is obviously you've got the revenue in the ADR. By hovering over the tile, it'll show you where they're located on the map by bouncing up and down. And then you can also pull up their occupancy as well. So that's obviously a really important metric to understand, how are they achieving such high revenues with that ADR? They're still achieving quite a good occupancy in this case of 72%. Excuse me, sorry. So yeah, that's top properties. As I said, try and go in, try and identify what it is that's setting them apart. As I say, they're professionally managed. Do they have professional photographs? Is there, an amenity they have that's really setting them apart? Is it something that you would like to include in your listing? I mean, you can see in this one, for example, they're listing the fact they've got a rooftop with a hot tub on it, AC. They're really listing their amenities to try and set them apart straight away. The last section in the invest section of MarketMinder is the market comparison here. So this is super helpful for a number of reasons. First of all, if you're subscribed to a number of markets, we try to narrow one down based on which one you want to invest in based on their investability. You can compare them here. Also, if you're just subscribed to one market and you want to try and get an idea of which property type is best, are you umming and ahhing between a 2 and a 3 bed, for example, you can compare their performance here as well. So if you just hit apply, you can do this by revenue, average daily rate, and occupancy. So you've got the last 2 years worth of performance. You see in this case, the 2 beds are represented by this orange line and the 3 beds by this blue one. You can see every month over the last 2 years, the 3 beds have outperformed the 2 beds in revenue generation. But you can see year on year, there's been a 5% decrease for revenue growth for those 3 beds. Second of all, you've got your average daily rate, fairly similar, similar growth for both of them. And then occupancy, again, fairly similar, but it looks like the 2 beds have slightly outperformed the 3 beds over that time. And then the last thing I want to show you is just the map itself. So just a second while it loads. I've been having a bit of trouble with my Wi-Fi today. I'm sorry. So just bear with me a moment. Perfect. So with the map, again, you can filter the data that you're viewing. So if you want to remove the shared rooms, the private rooms, we've been looking at 2 beds. So let's keep doing that. Now, if you know where you're going to invest in the city, for example, so say, you're looking in this square area, you could say that these properties are then your direct competitors going forward, potentially, but they're also really good reference points for understanding what's going to be possible going forward. So again, this is giving you the last 12 months performance for these listings. You can see those days available, the occupancy, and then the revenue as well. So you can kind of build a bit of a comp set before you've even got your property based on what you're seeing in these other current short-term rentals in the area. And then the last thing I want to show you is this slider you've got here. So full disclosure, this isn't available for every market in MarketMinder. It's only in the larger cities. So with this, you've got the map, and then you've got this slider which shows you this list view. So with this, from an investment standpoint, this is really useful to try and narrow down or identify areas within a city by whatever metric you're interested in. So say you wanted to find out in Denver, what neighborhood or zip code has generated the highest revenues over the last 12 months. So if you just select the revenue, we'll then order them from highest to lowest, or you can do it the other way, lowest to highest, but I don't know why you'd want to know that. So in this case, you can see that Hilltop has been the top performer over the last 12 months, 160 listings, good occupancy as well, 87%. You can do the same for occupancy rate. So I always recommend just keeping an eye on this listings number. You can see in this case, there's 96% occupancy, but that's across 14 listings. So that would most likely explain why it's so high. And again, average daily rate, you can do the same. So just a quick reminder that is only available in the larger market, generally the city markets in MarketMinder. And that's pretty much it. So just to recap, good place to start is always the Rentalizer, where you can get individual property estimations. You can then compare it against what's gone on historically in the research section. Top properties, that's just going to show you those top performers, the ones you might aspire to or try and emulate. Market comparison, really useful for narrowing down markets or comparing property types. And then last of all, the map view, just really helpful just to get an idea of, what your direct competitors may be. And as I said, again, if you're trying to narrow down a city even further by, potential zip code or neighborhoods, it's really helpful for that as well. So yeah, that's it. I think we're going to hand over to Maddie now and do answer some of the questions you may have posted. But thanks very much for listening, guys. Yeah,
thank you, Tom. That was really, really informative. I think just to comment, that's really, really, really useful for a first-time investor when you're perhaps looking at Airbnb or looking at Vrbo and clicking on individual properties. But here we have it all reunited, so it's much easier to filter through and find those useful comparisons.
Exactly.
So keep on adding your questions in the chat, but we'll get started with those. So here from Yennefer, we have, what if I did not buy the property and I'm just renting it from the owner? Where do I input that number? And I think that was when we were looking at the calculator. So, rental arbitrage there.
Yeah, good question. So it's kind of a tough one to answer. So you have this other box here. So what you can do is input. So obviously no one's rent is probably this cheap anymore, but if you say for the 12 months, you're paying $1,000 a month, you could input that as your as an other cost. So that overall rent, and that'll give you those operating costs. And then if you just put a $1 here, so you can kind of get an idea. This cap rate then obviously becomes redundant, and then any operating costs, you can just add on top. So it's kind of a difficult one to calculate 100%, but it can give you a rough idea what might be possible. But yeah, the financial calculator is very much based on someone potentially purchasing a property.
Yeah, and I know on the website we also have some resources for rental arbitrage. I think there's a blog with some interactive tools to help find the best cities for it as well. Rena, how do you know when a market is oversaturated?
Good question. So a good place to start is, let me just reset these filters just to what we have. Sorry, 1 second. Wi-Fi is tired again.
Struggling.
Yeah. Also, excuse me, guys. I'm recovering from a cold, so apologies for the coughing. Okay. But when it does load, this is what I was gonna show you. So you've got your active listings and your booking demand. So this is, as you might guess, showing you the total active listings in the market. Again, you can view this by day, week, or month. But what's useful here is comparing whether supply is meeting demand. So if we look at June of last year, you can see 2-bed properties. There was 201 available in this market in the active listings. If you scroll down to the booking demand and go to the same month, you can see that of those 201, 183 received at least one booking in that month. So that's not saying they were booked for that entire month. That could have just been one day of the month. Again, if you want to get more granular, you can do it by week for both. But what you can also do is if you divide that listing nights booked figure. So listing nights booked is just the total number of nights that were booked across all of those 187 properties. So if you divide that 3,589 by that 187, that'll give you an average number of occupied nights for those 187 properties for that month. So this is a really good way of getting an idea of, whether supply is meeting demand. Another metric you can also look at is on the overview, this rental growth. So this is showing you by quarter the number of active rentals that are being added. That are being added to the market. So you can see from Q3 to Q4 of 2022, we went from 6,242 to 6,283. So roughly 40 over that time, over those 3 months. So that's one way of looking at it, but I would say the best way is, as I say, sort of look at the active listings versus demand, and then look at whether that's being affected by rates, or whether it's just the case of more properties coming onto the market and not receiving many bookings. But I would say, based on what we just saw there in the occupancy, the supply is fairly consistent with demand.
Great. Next from Rolly, can you cover on a high level how Rentalizer projection is derived? What is the look back period, 1 year, 2 year, etc., considered in the projection, or is it more weighted towards the recent months?
Yeah, good question. It's the last 12 months. So I guess a good thing to bring up here is active listings. So what we determine as an active listing is anything that's received a booking within, well, I guess we need to go into reporting months as well. So MarketMinder is updated at different timeframes. The historical data generally is updated monthly.
It's always monthly, yeah.
Certain sections of the research section are now weekly. Smart rates is daily, so it's a little bit confusing. But just for Rentalizer's sake, it's by month. So we'll say any property that received a booking in the previous month, we would have picked that up as an active listing. So that goes for any month in the last trailing 12 months. So that's how we determine that. So each of these listings would have received a booking in one of those months over the last 12 months. So it's as I say, it's pulling any property within that 10-mile radius that's comparable, that's had a booking over that time frame. So it's not weighted to a specific, say the last 3 months. It's that whole 12-month time frame.
Mm-hmm. And as opposed to, if you're concerned about the more recent months having a bigger impact, that graph that you showed with the change over time is a really useful one to look at there.
Yeah, no Rentalizer estimate here.
Cool. So does the revenue potential also assume 100% occupancy along with 365-day per year availability?
Good question. No, it's working off the same occupancy. So it's working off that 365-day figure, but it's working off the same occupancy that properties have achieved. So if you look at this one, this figure, this 40,000 is based on this figure being 365, but the occupancy still being 82 and the ADR still being 135.
Mm-hmm. Quick one on pricing. I can share a link as well with some more information on the pricing for MarketMinder But pricing wise, for metro, does it count as one city or as multi or states like Minneapolis or St. Paul or Dallas and Fort Worth, so
on? So in this case for Denver, that'll be one price, that'll be one market. So each market is individually priced. I could say for Denver, for example, that this would be $99.95 per month. You can kind of, if you hover over the map, you can see our market boundaries. And then if you click on either one of them, it'll bring you to that new market. And if you're not subscribed to it, it'll give you the purchase option at the top here, and it'll tell you the price for that market. It usually goes off the number of active rentals in the market, but that can also change. So yeah, the pricing is market dependent.
Mm-hmm. And we also have state options now as well. Mm-hmm.
Yeah,
make it easier. Okay. Rentalizer says revenue includes cleaning fees. So would it be more accurate to subtract those cleaning fees from the revenue number to get a clearer picture of actual revenue for the owner?
So yeah, that's true. Revenue does include the cleaning fees. So yes, you would minus those cleaning fees. You've also got the option to input it into the financial calculator here. So that would then, I mean, this is a very well-paid cleaner, I think, but this would then minus that off that net income figure at the top there. So yes, it does include cleaning fees. Yeah,
and then of course we're also giving the option for if you're going to clean it yourself, you don't need to charge that.
Yeah.
An enterprise subscription, I can send you some more information or reach out to our hello at airdna.co to our support team, and they'll be able to put you in touch with someone. I think that's about it, and we're coming to the end of the time. Anything else you wanted to comment on, Tom?
No, just thanks very much, everyone, for joining. If there's any questions we didn't get to, we will get back to you via email. And please feel free to send me an email if you have any follow-up questions. But thanks again. We are holding these webinars every 2 weeks, every other Thursday. So the next one will be promoted shortly, and you should be able to sign up through our website. But again, thanks very much for joining, and thank you, Maddie, for joining me today.
Yeah, thank you, everyone.